Welcome to Wonderslate. Subscribe to our Telegram channel given in the description to updates and study materials. Topic for today's quiz is Indian Economy Set 4. Question number 1. If the RBI adopts an expansionist open market operations policy, this means that it will: Option A. Buy securities from non-government holders. Option B. Sell securities in the open market. Option C. Offer commercial banks more credit in the open market. Option D. Openly announce to the market that it intends to expand credit. The correct answer is Option C. Offer commercial banks more credit in the open market. An open market operation, OMO, is an activity by a central bank to give or take liquidity in its currency to a bank or a group of banks. The central bank can either buy or sell government bonds in the open market or, which is now mostly the preferred solution, enter into a repo or secured lending transaction with a commercial bank. The central bank gives the money as a deposit for a defined period and synchronously takes an eligible asset as collateral. A central bank uses OMO as the primary means of implementing monetary policy. The usual aim of open market operations is, aside from supplying commercial banks with liquidity and sometimes taking surplus liquidity from commercial banks, to manipulate the short-term interest rate and the supply of base money in an economy, and thus indirectly control the total money supply, in effect expanding money or contracting the money supply. This involves meeting the demand of base money at the target interest rate by buying and selling government securities, or other financial instruments. Monetary targets, such as inflation, interest rates, or exchange rates, are used to guide this implementation. Question number 2. Redistribution policies geared to reduce economic inequalities include: Option A. Progressive tax policies. Option B. Land reforms. Option C. Rural development policies. Option D. All the above. The correct answer is Option D. All the above. Question number 3. Short-term finance is usually for a period ranging up to: Option A. 5 months. Option B. 10 months. Option C. 12 months. Option D. 15 months. The correct answer is Option C. 12 months. Short-term loans are made for small amounts of cash and repaid in one payment, with terms from 1 day to 1 month after the loan is made. They are easy to apply for, and you can read in depth here how to find a reputable lender with low rates, as the rates can be very high if you do not choose carefully. These loans are not credit checked, so almost anyone can qualify. Generally, people use these for household emergencies costing up to $1,500. Payday loans are high-interest loans that aren't credit-checked but are meant to be repaid when you get your paycheck. They typically have terms from a day to a month and are very high interest, for a relatively small amount of money. Usually customers borrow $50, $500. Question number 4. In India, which one among the following formulates the fiscal policy? Option A. Planning Commission. Option B. Ministry of Finance. Option C. Finance Commission. Option D. The Reserve Bank of India. The correct answer is Option B. Ministry of Finance. In India, fiscal policy is formulated by the Ministry of Finance. Traditionally, fiscal policy is concerned with the determination of state income and expenditure policy. But with the passage of time, the importance of fiscal policy has been increasing continuously for attaining rapid economic growth. Question number 5. The budget deficit means: Option A. The excess of total expenditure, including loans, net of lending over revenue receipts. Option B. Difference between revenue receipts and revenue expenditure. Option C. Difference between all receipts and all the expenditure. Option D. Fiscal deficit less interest payments. The correct answer is Option C. Difference between all receipts and all the expenditure. Definition of budget deficit. A budget deficit occurs when an individual, business or government budgets more spending than there is revenue available to pay for the spending over a specific period of time. Debt is the aggregate value of deficits accumulated over time. Question number 6. Since 1983, the RBI's responsibility with respect to regional rural banks was transferred to Option A. ARDC. Option B. SBI. Option C. NABARD. Option D. PAX. The correct answer is Option C. NABARD. RBI is regulating the entire banking system, all the banks, public sector, private sector and RRBs, in India. NABARD, National Bank for Agriculture and Rural Development, is responsible for the overall supervision and inspection of the RRBs in India. Question number 7. Devaluation of currency leads to Option A. Fall in domestic prices. Option B. Increase in domestic prices. Option C. No impact on domestic prices. Option D. Erratic fluctuations in domestic prices. The correct answer is Option B. Increase in domestic prices. In modern monetary policy, a devaluation is an official lowering of the value of a country's currency within a fixed exchange rate system, by which the monetary authority formally sets a new fixed rate with respect to a foreign reference currency or currency basket. Question number 8. The ARDC is now a branch of the Option A. RBI. Option B. NABARD. Option C. IDBI. Option D. STBI. The correct answer is Option B. NABARD. Transfer of Assets and Liabilities of Agricultural Refinance and Development Corporation of the Act, National Bank for Agriculture and Rural Development Act. Question number 9. Paper currency first started in India in Option A. 1861. Option B. 1542. Option C. 1601. Option D. 1880. The correct answer is Option A. 1861. With the Paper Currency Act of 1861, the British colonial government got serious with the business of banknote making in India. Since then, banks lost their right to issue currency, leaving only the state in charge of it. These notes came along to be the first official paper notes by a government in India. Question number 10. In utensils worth 1000 rupees are produced with copper worth 500 rupees. Wages paid are 100 rupees. Other material purchased is worth 100 rupees and depreciation of machinery is 0. Then what is the value added in process? Option A. 1000 rupees. Option B. 500 rupees. Option C. 400 rupees. Option D. 300 rupees. The correct answer is Option D. 300 rupees. Worth of utensils equals 1000. Expenses include copper worth. Wage and material purchased equals 500 plus 100 plus 100 equals 700. Value added equals 1000 to 700 equals 300. Question number 11. Deficit financing implies Option A. Printing new currency notes. Option B. Replacing new currency with worn-out currency. Option C. Public expenditure in excess of public revenue. Option D. Public revenue in excess of public expenditure. The correct answer is Option C. Public expenditure in excess of public revenue. Deficit spending is the amount by which spending exceeds revenue over a particular period of time, also called simply deficit or budget deficit, the opposite of budget surplus. The term may be applied to the budget of a government, private company, or individual. Question number 12. In which of the following sequences the change in quantity of money leads to change in price level in the Keynesian models? Option A. Change in quantity of money, change in investment, change in employment and output, change in rate of interest, change in price level. Option B. Change in quantity of money, change in employment and output, change in investment, change in the rate of interest, change in price level. Option C. Change in quantity of money, change in investment, change in rate of interest, change in employment and output, change in price level. Option D. Change in quantity of money, change in rate of interest, change in investment, change in employment and output, change in price level. The correct answer is Option D. Change in quantity of money, change in rate of interest, change in investment, change in employment and output, change in price level. Question number 13. Foreign direct investment ceilings in the telecom sector have been raised from 74% to Option A. 80%, Option B. 83%, Option C. 90%, Option D. 100%. The correct answer is Option D. 100%. Question number 14. Which of the following is not a part of machinery that settles industrial disputes? Option A. Wage court. Option B. Works committee. Option C. Conciliation officers. Option D. Board of conciliation. The correct answer is Option A. Wage court. Wage assignment is act of taking money directly from an employee's paycheck in order to pay back a debt obligation. A wage assignment, when involuntary, may also be referred to as a wage garnishment and requires a court order. Thank you for watching the video. If you'd like practice this quiz, then download the Wonderslate app now. Link in the description below. If you have any suggestion for us, feel free to leave comments. If you liked the video and want to see more of it, hit the thumbs up and don't forget to click on subscribe button to get more updates of the future videos.